Hello and welcome to a brand new edition of Inside Out on the Road, a show where we focus on individual stocks. With in-depth analysis, we deep dive into financials. We'll also tell you about the key risks and triggers going forward. Well, let's get straight to our first stock today. My colleague Sonal traveled to Hyderabad and gets us this very special deep dive on Amara Raja batteries.
Of the battery maker Amara Raja batteries, whose products are known by the name Amaron, Power Stack, etc. The company is a leading battery manufacturer and supplies batteries to aftermarket, OEMs, private labels and export markets as well. The company has three segments. The first one is automotive, where they are the largest player in the aftermarket segment. Second is the industrial segment, where they have the largest market share in the Indian telecom battery segment and data center battery segment as well. And third is the new energy business, which contributes 4% to their revenues. The company has 7 manufacturing facilities and 19.2 million units of capacities in 4-wheelers and 30 million units capacity in 2-wheelers. This in the automotive segment. In the industrial segment, they have capacity of 2.3 billion ampere hours. Let's talk about the financials. They have seen a steady growth here, from revenues of 6,300 crore rupees in FY19 to 10,500 crore rupees in FY23, which is 11.5% CAGR. EBITDA has grown at a CAGR of around 9%, which is from 1,000 crores to around 1,400 crore rupees. Profits have grown from 500 crore rupees to 700 crore rupees in the same period, which is again a CAGR of 9%. Company is focusing on maximizing the lead-acid battery system and also expanding the new energy business. Internationalization is a big focus for them. They will be spending 400 crore rupees of capex in the lead-acid battery segment in FY24 itself. But what is the strategy? What is the outlook going forward? Let's discuss this with the management of the company. Of the company with us, Harshavardhana Gourineni, who is the ED at Amara Raja Batteries, is joining us now. Harsha, it's a pleasure to have you with us on CNBC-TV18 and on this show as well. So, you know, as I was telling you earlier, the show is all about understanding the company, the strategy and a lot more. So let's first start with the battery market. How big is the lead-acid battery market, the shift from unorganized to organized? Are you seeing that? What's your market share like in the segment?
Well, our market share, let's start with that. We have various segments we're participating in within the automotive and industrial applications. Automotive, we have both OE and aftermarket. We have the #1 leading brand in aftermarket, the Amaron brand, which you might be aware of. Our aftermarket share could be anywhere between 30 and 35%. OE, we have by design participated a bit less. We're at about 30% there. And when we come to the industrial side, we have applications like telecom, UPS, power control. So telecom, we've been market leaders since the late 80s actually. We've introduced new technology which has helped us gain market share, and 60% of the market would be with Amara Raja. Actually, every second telecom tower would be powered by our batteries now. And when it comes to UPS, we have about a 40% market share. So these are dominant positions, and you'd think that gaining more market share would come with some diminishing returns. So we're looking to globalize the business much more.
Okay, and I'm going to be asking you about that globalization strategy that you have as well. So first, before I do that, just understanding the battery value chain as well. How is the battery made? What are the raw materials like? How do you source your raw materials?
Sure. So we're primarily into lead-acid batteries. So lead is the primary raw material, more than 60% of the value of the battery. Most of our procurement is actually coming from recycled sources now, about 85% of the lead. And that's because the lead technology is a very sustainable technology. As a product, the lead-acid batteries are the most recycled in the world, and have the best recycling efficiency also at above 98%.
Okay, so it's largely recycled and whatever is procured otherwise is via imports?
No, largely we've been able to localize the source. A few alloys are coming in from some international suppliers, but it's very minimal, and going forward the circularity is only feeding itself.
Okay, so let's talk about the globalization aspect, or the fact that you're looking at expanding your export presence. Right now it's around 12 to 14% of your revenues. What's going to be your strategy there, both in the automotive and the industrial segment? What kind of, I would say, products would you be selling in the export market? Do you already have a plan in place there?
Yes, we have a plan which is being executed now. Automotive batteries, we've been in the international markets for almost 2 decades now. When we entered the domestic market here in India, we simultaneously did that. So in the Indian Ocean Rim, we by design were focusing primarily in the Middle East, Southeast Asia, parts of Africa. So we have dominant market shares in Singapore, Malaysia, Cambodia, UAE, Bahrain, right? So this is because of our long tenure there. We're looking to get deeper into these geographies, pushing more into areas like Indonesia, Malaysia, Philippines, other African markets also, especially Western Africa, which are developing at a faster pace. But there's been a few geographies we haven't touched, like the Western markets, Europe and the Americas, which we're having some initial success in now, and that's going to play a big role in our geographical expansion going forward. Now these geographies like Europe and North America, there's a home for our premium technologies as well, like enhanced flooded batteries and AGM batteries, which primarily power the start-stop applications we're seeing more of now. And generally, more the higher load of onboard electronics we're seeing. So our technologies are easily deployed there, and we're getting a better value realization.
Okay, so that I'll take up in the further questions, because you're looking at premiumization in the export market as well. Which, say, 4 to 5 years down the line, what would export contribute like with all the strategies which are taken up by you now? Is there any number in mind?
More than a number, we're looking at a ratio.
Yeah, ratio,
right?
yeah.
So in the next 5 to 7 years, we're looking to have an equal amount of automotive exports as to our volume domestically. And I haven't touched on the industrial side yet. Telecom is of course fast transforming with the 5G rollout, and we're able to continue supplying replacements and also some of the new cell towers with lead acid technology, introducing lithium packs as well. So we'll be globalizing that. And then when it comes to UPS, especially the data center application, that's something we're looking at a key focus in Europe and North America as well.
And that is a big growing market, right? Not only in export markets, even in India we're seeing big data centers coming up. So when we talk about the telecom space, we have the 5G towers now. A lot of these companies are focusing there. Would that mean a different battery? Would you have to change the product profile in some way?
Well, a lot of smaller cell sites will be coming, right? They're already here. They're rolling out at a rapid pace. The form factor is the limitation there. You need something that has more energy density, and lithium has found its way there. It's already, even when Jio was rolling out its tower system in the beginning, lithium has come into the country, and now with 5G it's only furthering. So we know there's a transition happening here. The larger base towers are still largely supported by lead acid, but we're also able to make sure that we're able to cater to the requirements of technology. We have our in-house pack assembly that we're dealing for the telecom pack requirements. And lead acid also, we clearly see a runway for that as well.
Okay. So, you were briefly talking to us about how battery is made as well, and the casting, the process. Would you like to tell us a little bit more about that? Sure.
So traditionally, lead acid batteries are made in components, right? Largely the component will be the grid and the paste. The grid is made of lead, and it's a casting process, a gravity casting process, which we've now transformed into a continuous plate making process, where the lead is melted down and then rolled into a slab, which is then further refined and pressed and punched into the exact grid dimensions. So this gives good material efficiency and a better product performance also, because of the uniformity in the grain structure. To simplify it, it's the best technology we have for plate making now, and we're rolling that out into all of our applications. So aside from the plates, there's the paste also, which is made of lead oxide, which needs to be applied in a very calibrated manner to these plates, which are then grouped into cells, inserted into a plastic box made of polypropylene, connected. Each cell has to be connected through a welding process, sealed, filled with acid, going through a charge-discharge cycle, and finally it'll be finished and shipped out to the customer. That's roughly the process.
Okay, I'm remembering my chemistry lessons as well now after that. But you know, we'll continue this conversation, but you have to show me around the office as well, so let's go for that.
Absolutely.
About how new energy is also going to be a big focus. It's 4% of revenues right now. Can you give us a sense of what it would look like, say, 5 years down the line? Will it improve your margin profile? And what kind of capex, or brown figure that you're looking at in this space?
Well, we have a few scenarios we've worked out. Of course, it really depends on how quickly the market develops, various parameters around the supply chain. But we are expecting good offtake, especially from the two-wheeler and three-wheeler markets for our cells and packs. Now, in terms of how big that'll grow, I think we would estimate that in the next 7 to 10 years, we would be looking at about $1 billion business, right? Many things have to go right, and that's with the current understandings of our technologies, our process, and raw material availability. Then, in terms of capex, we have an ultimate plan of about 9,500 crores here in Telangana in our Amara Raja Giga corridor. That'll be done in phases, and there'll be milestone-based triggers for the investment, starting with an initial capacity of about 2 gigawatt hours in terms of cell manufacturing capacity.
Okay, that's interesting because there's a lot happening in that space. You know, you interestingly mentioned technology a couple of times. I wanted to understand that. After the tie-up that didn't go through because of whatever Johnson selling its power business, are you looking at more technology tie-ups now? And with the recent stake sale that happened as well, can you throw some light there?
Sure. So, of course, we had the strategic partnership with Johnson Controls, a very successful one for more than 2 decades. And their reasons for exit are theirs alone, but we had initial reliance on technology, but over the last decade plus, we've been able to not only indigenize and tropicalize that technology that was shared to us, but develop on that quite well, which has helped us build the market leadership position here in India and in the markets we're serving. Going forward, I think we have very well stabilized the base technology of lead acid and the more premium technologies of enhanced flooded and AGM. There are some technologies that are still in an R&D stage globally, bipolar batteries, advanced lead carbon batteries, and some things that may not be even at the surface level yet. So we'd be working both internally and through collaborations to try to operationalize some of those technologies.
So you're looking at partners in both the new energy segment and the lithium-ion segment, right?
Absolutely, yes.
Okay. So, see, since we are talking about bigger plan over years, I was looking at your revenues from around 2,000 crore rupees in FY12 to almost 11,000 crore rupees right now. That's a 5x jump that we've seen in the last couple of years. What is the next plan of Amara Raja Batteries in terms of revenue growth? And with the split that you're talking about, more focus on exports, more focus on new energy, what will your margin picture look like, the expansion that you're planning there?
So if we can break it into lead acid to start with, I think we're at about 1.2 billion right now in USD. And we would be taking that to about 3 billion in the next 6 to 7 years. This is largely based on our globalization strategy, where we're also getting much better price realizations, getting a premium for the advanced technologies. On the new energy side, the contributions will come in. It's like I said, it's hinged on the market development, but we're looking at a much more impactful business in the long run, because if you look at the automotive application, the starter battery is a very small portion of the vehicle's value, whereas the battery pack for traction propulsion will be, today we're seeing 30 to 40% value of the vehicle. So I think we can project that out, but we'll be seeing an even business within the next decade.
Okay, and margins in the lithium side would be around 10 to 12%. That is a number. Of course, the average would turn out to be different, but
yeah, I think we're seeing that globally in established players who are able to utilize large capacities. I think it'd be unrealistic to expect to see that very quickly, but definitely we'll be getting to that once things are stabilized.
Interesting. So last question before we let you go. Whatever plans you have in the new energy segment and the export markets as well, do you have enough capacity? Will you be looking at adding it? You spoke about the gigafactory as well, but are you funded? Do you need to tap markets for any funds, or you are okay on your own?
We've been cash rich for the recent past, but looking at our expansion requirements on both sides of the business, I think as needed we'll need to be accessing those opportunities for funding. But I think we're good to go for the next stage of our expansion. We're already operationalizing the 2 gigawatt hours I spoke about, and any capacity expansion that's required on the lead acid side is already taken care of as well.
Okay, all right. This was an interesting conversation, Harsha. Thank you so much for joining us and explaining to us in detail your business, what the outlook is, and definitely investors are looking forward to the new energy expansion as well, and both the segments growing together. It was a pleasure to speak to you today.
Wonderful to connect. Thank you.
All right, with that, it's a wrap here, but back to you in the studios.
All right, that was a deep dive into Amara Raja. But for the time being, we'll have to slip into a short break. We'll be back with another interesting stock. HEG is the stock in our Swotlight segment. Don't go anywhere. Welcome back. You're tuned in to Inside Out. Well, today we focus on HEG, which can be termed as a steel ancillary. As we know, steel can be made via the blast furnace route and also via the electric arc furnace route. Now, HEG manufactures graphite electrodes, which is used by electric arc furnaces for steel production. It's used as electrical conductors to generate heat to melt steel scrap. HEG has approximately 13 to 14% of the world graphite electrode capacity and will move into third rank from fifth rank, as its additional 20,000 tons comes on stream in this month itself, that's September 2023. Well, HEG is the last new entrant in the graphite electrode world in 1976. That shows that it's an industry with high entry barriers. In terms of consumption then, 1.8 kgs of electrodes are used to produce 1 ton of steel, which means it approximately accounts for around 2% of the cost of production of steel by the EAF route. Well, in the near term, there are likely to be plenty of headwinds, but part of the street is positive on the longer term prospects of graphite electrode companies like HEG. Now, GE demand is expected to remain robust in the medium to the long term, with the focus shifting to EAF steel production as a result of decarbonization efforts and as new EAF capacity comes on stream in the coming years. Well, EAF steel emits a fourth of the carbon in the environment if you compare it with the same steel that's produced via the traditional blast furnace route. Now, EAF steel production ex of China, well, it's moved up from around 350 million tons to around 435 million tons. And by 2030, that number could hit 535 million tons. Now, the additional 100 million tons of steel that will be produced by the EAF route, that could entail a potential demand of 200,000 tons of electrodes. And as of now, only HEG is adding capacity of around 20,000 tons globally. Even China's production through the EAF route is around 11%, and that's likely to go up to around 15 to 20% by 2025. Well, the management has stated, post its last quarter's numbers, that the next couple of quarters, they could be a little bit softish, and margins can see some downside because electrode prices, they are falling at a faster clip in comparison to needle coke prices. Remember, needle coke is the key raw material. Now, the fiscal years FY18 as well as FY19, well, that was the golden period as Chinese electric arc furnace-based steel production more than doubled, which led to a supply chain shock as the electrode demand rose by 95,000 tons. Well, the management admits a repeat of those 60-70% margins, well, that's highly unlikely. Now, a quick breakdown of the revenue shows that exports account for around 65 to 70% of its production, while ultra-high power graphite electrode accounts for around 70% of its total mix. Moving to the valuations then. Since FY24 performance will be a little bit subdued, it appears the stock is trading at around 22 times PE. But since FY25 could be far better, valuations appear a little bit more palatable at around 13 times. So the key triggers going ahead are volume growth from FY25 onwards as their capacity expands by around 25%. Also, their foray into graphite anodes for lithium-ion cells, for which they're incurring 1,000 crore capex, and that project is expected to come in stream in the second half of FY25. Well, let's wind this down with the shareholding pattern. The promoter entity, well, they hold close to around 55% stake in the company. The FIs, we put it together, they hold roughly around 6.5% stake in the company, and a near equivalent amount is held by domestic funds. Well, we've completely run out of time on this edition of Inside Out. I hope you enjoyed the show. It's goodbye from Sonal and myself, but you keep writing to us. Tell us about companies you want us to feature on the show, and we'll try to feature some of them. Thanks so much for watching.